Hello everyone, I'm back with another video and I wanted to talk about appraisals, specifically appraisal values versus purchase price. These past couple of years, the market has been so competitive. Buyers became accustomed to overbidding to have a chance at getting their offer accepted. Recently, with the rate increases, the housing market has started to cool off. Appraisals are starting to come in a bit lower. The problem that could arise if you overbid on a house and the appraisal comes back lower and the seller is expecting a certain price, the lender is only willing to lend on that appraised value. Lenders will only lend off of two factors: purchase price or appraised value, whichever one is lesser. So for example, let's say you put an offer on a house without any conditions of $500,000 and it gets accepted by the seller. But the appraisal comes back and it comes in $50,000 lower than what you offered at $450,000. In this situation, you would be responsible for the spread of $50,000 because the seller is still expecting the purchase price you agreed on, but the lender is only willing to lend you on the $450,000. So in order to move forward with the sale agreement, you would have to pay the new down payment on the $450,000, which would be $45,000, 10%, plus the spread, which in this case is $50,000. So $95,000 is what you would need to come up with on closing. Keep in mind, this is not including any closing costs. This is why it's extremely important to put some sort of condition on your offer. A finance condition can protect you if you cannot obtain financing to move forward with the purchase. But the market is still competitive and a finance condition may be the deciding factor when accepting offers. So if you want to go in without a finance condition, you can attach something called an appraisal condition. This means that if the appraisal comes in lower than the purchase price, you are no longer required to move forward with that purchase. So let's say you didn't have any conditions on your offer and the appraisal comes in lower than the purchase price. What are your options if you can't pay the difference out of pocket? The first option would be to try to negotiate with the seller. You can try to explain the situation and negotiate the price down. The seller might not be willing to cut down the whole amount, but you could possibly meet in the middle. Another thing you could do is borrow the money from a line of credit. With this option, you would have to factor in the payments from this line of credit into your mortgage application to make sure your debt to income ratios still are in line. You could get the money gifted as well. If you have someone you know who would be willing to pay the difference or even part of the difference, unlike borrowing the money where you would have to include the payment in the mortgage application, with a gift you don't have to do that. Unfortunately, if you cannot come up with the money or these suggestions aren't any option for you, if you didn't have any conditions on your offer, the seller does have the right to sue for their losses. It's important to attach some sort of condition on your offer to protect from events like these happening and get expert advice in regards to your mortgage and the process. If you have any questions about this video, don't hesitate to ask, whether it's in the comments section or calling me. I'm always here for you. Also, if you have any video suggestions, I'd love to hear them and I'll make a video about that. Thanks for listening and have a great day.